The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This is a quote by Duke Ellington. A believer is an optimist who thinks of tomorrow. Market-wise, let's take a look at it out here. We have the Dow Industrials up 65. NASDAQ is flat. S&Ps are up 3.5. Gold contract up $8.60, trading at $1,211.80 an ounce. Silver up 22 cents at $16.62 an ounce. Platinum up $9 at $1,157 an ounce. Copper up a penny at $2.78 a pound. Light sweet crude flat at $56.94 a barrel. Bonds, we have the 10-year down 13 ticks. 128.29, 30-year off 1.5 points at 161.09, and King Dollar down 691 ticks at 96.25. The Euro's up 79 at 109, and the yen is trading down 16 at 118.87. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, let's go to the world of the S&Ps first, and we'll take a look at the SPY. This is going to get really interesting out here, and this is what it is. So, what do we have yesterday? Yesterday, you got to a price point of 212.48. You get over the high, close underneath it, you're in the lower range. So anything underneath 212.24, you're in the lower range. Yesterday, we did volume out here of 79 million. We're at 68 million right now. So what that sets up is that sets up, you get slightly higher volume, you pull them back slightly. The close today is going to be crucial, and this is why. Because the yin and the yang is out here in an amazing way. It's like, okay, out here, have we rejected lower price with lighter volume? You can make that argument. Why can you make that argument? Because when we came down on the 17th of April, the high of the 17th of April is 209.23. We went to 209.33 today. We had that level down there was 191 million shares down there at the 209.23, and you only get 68. Okay, so that's the argument that you'd go higher in price. Now, that's if we stayed right where we are now at 211.36. We stay there, we're going to go to the highs tomorrow once again. If we drop down, which is real easy to do, to 210.63. Now, watch what I'm going to do here, for. We're going to put this on a 10-minute basis. And what you have is this. Your first leg down this morning was a fast, furious leg. It got down to 209.33. And at 209.33, we have a high volume low. That's on an intraday basis. So that high volume low number is going to get tested. With an hour left in the marketplace, I suspect you're not going to get all the way down there, but you very well could get at the beginning of that. And the beginning of that happened at 10 o'clock this morning. And the beginning of that, the high of that is 210.63. Now, what would that do? Well, at 210.63, folks, you just end up with a little doji there. A little doji is just a rollover. So this close is going to be a really important close. NDX 100, we take a look at the 3 Qs. Different ball game in the 3 Qs. 3 Qs were the strongest going topside. Bottom line, what the 3 Qs have out here today, there are 28 million shares. You're trading out at 110.14. Now, you're not in the lower range. The Qs went to 109.11, got in the lower range. What you do have, though, the way the 3 Qs are, whether it stayed up here or not, you basically, you get a hanging man, okay? So this baby here is saying the 3 Qs still want lower price. Inside the NDX 100, what's putting strength into the NDX 100 today, even though it's down, is Microsoft is up $1. You get Garmin up 99 cents. Viacom's up $1.43, and you get Seagate Technologies up 1. Taken away from it is that you have C.H. Robinson down 323. You get Biogen down 1144. AFCO Technologies is off 314, and you have Dish down 131. We go over and we take a look at the small caps. What do we have inside the small caps? We use the IWM. What we have inside the small caps is this. IWM is trading at a price point of 125.10. And the IWM really gave away quite a bit of information yesterday. Oh, this is pretty cool. So the IWM got to a price point today of 123.25. You're at 125.06. You do have an expansion of volume, though. That's what's happening on this. So bottom line, the IWM will be back down to these lower levels also. Gold contract. What do we have with gold? Let's take a look at gold. Okay, this is going to be really a trip. The reason being is that at the Fed meeting tomorrow, coming out at 2 o'clock, okay, you're going to see gold move, you're going to see bonds move, you're going to see the dollar move. So we have gold trading out at 212.20. That level, we've done 142,000 contracts. That bottom line is saying it wants to run up to this 1224.50 area. We'll see whether we get the juice to basically take that out and do an ABC structure on the way up. What you do have is that you have multiple ABC structures inside the equities market, inside the metals market, gold market, that are doing ABC structures on the way up. So check this out, because this is where this is really going to get interesting. If we go over and we take a look at the TLT, the TLT out here today, well, I'll take a look at the 10-year bond first. The 10-year bond is coming down, has 13 ticks. You're trading 1 million contracts thus far. Your swing point out there has at 128.22. We're at 128.28 right now. That has 1.1 million. So bottom line is that this little baby is coming into a lower swing point. You do have an expansion with volume, but what I suspect is going to happen out here is this. Is that, let me put this up. I'm going to put this bond up for a second so I can show you what's happening here inside the 10. So if we pull this 10-year bond, what you're going to see is that this little baby is trying to test a swing point from the 23rd, was 4 days ago. That's 128.23. We got to 128.26. There's big volume down there. And the last time that we came down there, the last time that we had any volume on the bond was actually a counter trend bounce. Now, this is going to get really wild, folks, and this is why. We had a counter trend bounce at 10 o'clock this morning, and we got up to 129.06. When you get something like that, and then we come back down, so, okay, so watch this. The counter trend bounce, as it went higher, had 71,000 contracts. They smash it down. You get down and you hit a low, and you hit low with 25,000 contracts. That's saying that bonds, even though they're down right now, they're not done. That's saying that bonds are going to bounce and get into higher price once again. Amazing, okay? So check this out, because this is where this is going to be. Tomorrow is going to be just dynamite, folks. I mean, there's going to be so much movement around here. It's going to be amazing. So if we go over to the dollar index, we take a look at what we have with the dollar index. Dollar index is trading at 96.23. We've done 50,000 contracts, and the dollar index is projecting that it's going to go after its March 18th swing low of 94.76. That's a big number, because we've already broken the swing points. We have 50,000. You need 58,000. So I don't think we'll do 58,000. But the bottom line is you're under 96.31. So that's saying, hey, you're going to get down to the bottom of this. So when you put this together, this is where this is going to get really wild. And this is what it is. The dollar wants lower price. Gold wants higher price. The bonds do want higher price, but I think that's going to be basically a dead cat bounce. because I think bonds, the way bonds have been trading, folks, it looks like the longer trend has changed. That's where my head's at with bonds right now, particularly because what has happened is that it's come off the high twice with volume, and today's being just deviant enough in all of these markets, meaning the metals market, the bond market, and the dollar index, that we're going to get some heavy, high volatility when the Fed comes out tomorrow at 2 o'clock. I suspect the status quo is going to be there, meaning they're not going to raise rates. But bottom line, something is going to be in that statement that is going to have markets get into a little conniption mood, meaning you'll have spikes higher, you have spikes lower. When all said and done, I suspect the markets are going to be lower. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We get the Dow Industrials right now up 66. You get the NASDAQ down 3. S&Ps are up 3.5. And let's go over to our man, Mr. Basil Chapman. Don't forget, folks, every trading day, 11 to 12 Eastern Standard Time, Basil does an outstanding show right here at TFNN. Get it right on your cell phone at TFNN.mobi. And tonight, folks, from 5:30 to 6:15, Basil's got a special treat for all his subscribers. Great webinar. There's going to be an additional webinar coming next week, same time, same station, and you can be a subscriber. And it's absolutely free. How do you do it? You come over to our website at TFNN. You go under newsletters. You go into trading newsletters. You see the opening call. You hit that. You test drive it for 30 days. That brings you into the webinar. You like the newsletter, you keep it. We'll charge you next month. You don't like the newsletter, you give it back. Bottom line, you still get a great education. Basil Chapman, what's going on?
Hi, Tom. How are you?
Doing great. You ready to rock and roll?
Oh, yeah, absolutely. This is such a perfect time because we've got so many, you know, I always look for those leg E's, D's or E's.
Yes.
This is so important. We're going to be able to look at the techniques that I use and then put them into real-time practice. And that's fantastic because at this very moment, you remember I spoke to you yesterday about the arch formation. It's a pattern that I look at. It's called the right shoulder failure pattern.
Yes.
In my CD introducing the Chapman wave methodology, it's chapter 21. I call it the right shoulder failure pattern. What happens is a price runs up, it makes a peak D, E, or F, and then it pulls back sharply. Then it rallies and it fails. It makes what looks like a lowercase h. If it takes out the left side support, it's gone. That's it. And what happened? We saw the same thing occurring in the IBB.
Okay.
And you remember I said that our subscribers had been short. We've got it right there. We're short just about there on the IBB, the equivalent of about 365. And it plummeted this morning down to 338.60. It's under the 9-period. I'm going to teach about this 9-period exponential moving average, teach about the divergence between. Look at the MACD. The way it was so strong when it went to that peak E at 374 on the 20th of March. And look how weak it is over here. So this is the first time that we're seeing technical underpinnings since October, I'd say. This is the first time we're seeing the technical underpinnings in a very important sector, the iShares of the biotechnology ETF, coming down like this. And today it wasn't able to participate very much at all in the rebound. It's still down 365 at 344. And also, you remember yesterday we were talking about you can also look at the number of sessions in an arch or a cup formation from the left side to the right side. And I spoke to you about the S&P.
Okay.
That it went to a peak D on the at 212.24 on the 25th of February, comes charging down to 204.12, and that took 21 days. And then what happens is it runs back up, and yesterday it made leg E, and that E went exactly on the 21st day in exactly what I call the plumb line. That line right there was the low. So from the left side high to the low to the right side high for this particular peak, it's gone 21 days down and then 21 days exactly to the upside.
That's crazy, huh? That's wild. I know.
That's like a mirror image. It's like the symmetry. It's impossible to believe. I did not believe when we made that little doji candle that it could actually do it on the 21st day, and that was yesterday. And look, today makes that peak E if there's no new high, and I can't see between now and the bell going to 212.49. It's at 211.28. Here's another thing. I was in the Chapman wave methodology. What we look for always is from the lowest low bar, what I'm showing here, you want to go 4 successively peaks to the upside. At peak D, you can go a little higher, but at peak D, other things can happen. And that's why it's so important that we look at the weekly chart, because we finally have leg D in the weekly chart. So that says we're in a very critical period because we have to wait till Friday at 4 o'clock. But so far, we've got leg D. If all of next week there is no new high, we finally made a peak D in the SPY, and that says be a little bit careful here, because if we start to break underneath 208, 208.50, somewhere around there, that's going to suggest that we're in for at least a short to intermediate term pullback. So this is what we'll be studying. We were looking at the time sequence. We were looking at how you can use the MACD and the slow stochastic, how that 9-period exponential moving average is so important. It is impressive that the SPY came back from the lows today and it's over the 9-period moving average, but we're going to see if it has the strength to retest the high that was made yesterday. So we'll be discussing all these factors this afternoon. It's what have we got? Just another 2 hours, and we'll be starting
5:15 to 6:15. And you're going to take some questions, right?
And I'll take some questions. So I've got a very specific.
5:30. I'm sorry, 5:30.
5:30.
5:30
yes.
Eastern Standard Time, folks.
Eastern Standard Time, and I've got the format all ready, and I have intended to leave some time for questions. I always like to take questions. I think it's very important for people to have whatever question they have answered immediately, and then I always have charts that go with it to show exactly what we're looking at. So,
well, you know what's so cool, Basil, is that folks, the workshop, okay, is going to be on how the system works, and it's really cool because if you get in the newsletter, even if you test drive the newsletter, then you're going to understand much better how you're going into and out of equities, because you have an understanding of how the system works, which is really neat. Do you know what I mean?
That is, and I just want you to show you something. You were talking about the TLT and the TBT is actually the moving
double
image,
inverse. Yeah, right.
Exactly. Look at this. The low was made in the TBT at 40.57 on the 1st of April. We have just started leg D.
Okay.
So that's going to be very interesting. Why?
Yeah, it is.
Because the stochastic is only at 74%, but if it goes to 80% because the TLT comes down, all of a sudden you've got a confirmation of the cup formation that I was talking about before, which would look like this. So it's going. You're absolutely right. Tomorrow afternoon into Thursday, very important. I had a caller yesterday from Canada. She has studied the Chapman methodology. She had my CD, and we were right here in the GDX, which is the Market Vectors Gold Miners ETF.
Yes.
And she had asked me, where are we and what do you expect? So I said to her, as long as we're holding the 9-period moving average, you can expect that if we go 1 penny above 20.23, peak C will start leg D. And if you get to leg D and you're holding in the 20.40 to 20.60 area, you could go to the 200-period moving average, which was at 2109. I'll be talking about the 200-period moving average in the session in 2 hours' time as well.
Nice. It's a beautiful thing. And listen, folks, the way that you come into the workshop, you can go over to our website at TFNN, sign up for Basil's newsletter. You can test drive it 1 month. So you get test drive the full month. You're going to get the workshop tonight, 5:30 to 6:15. Next week, another workshop, another great education.
The next week is on the match between 1929 and now, just to talk about all the parallels and to look at the chart patterns that are unfolding.
It's a beautiful thing, man. Well, listen, you have a great next couple hours. Safe one. We look forward to the workshop this afternoon, Basil.
Thank you very much, Tom. Have
Thanks.
a great evening.
Okay, man. You stay right there, folks. We'll come right back. Dow Industrials right now are up 66. Nasdaq's down 7. S&Ps are up 3. We got gold up 950. Silver's up 23. Bonds, you get the 10 down 14. The 30 off 1.216. We're going to be right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Back, folks, and if we go over to Twitter, folks, what happened is that this is pretty wild how this Twitter was supposed to come out with their numbers, folks, after the close. Well, what ended up happening is that a firm that basically is an intelligence firm, I'll read it to you, tweeted out what the earnings were going to be, and I suspect somehow what ended up happening is that Twitter probably have these out in the public domain somewhere, and they just happened to find them. The high was $52.22 today on Twitter. It went down to $48, and they just halted the stock. Okay, so this is what came down the pike here. This is how this shook out. Is that the financial intelligence service Celerity posted 4 tweets with what they said with the first quarter earnings. Revenue and user figures were higher, but this is what wasn't. The earnings number beat estimate. The revenue number and the figure for mobile monthly average users both missed estimates. Bottom line is that I suspect they'll disseminate their numbers now. They were supposed to do it after the close, and then we'll basically see where this little baby starts trading. Pretty amazing. Now, folks, let's go over to our man, Mr. Darrell Martin. Don't forget, every Tuesday, every Thursday, Darrell has an outstanding show right here at TFNN, 1 to 2 Eastern Standard Time. He specializes in the Nadex platform. If you haven't test drove the Nadex platform, folks, it's a great time to do it. You get high volatility. You've heard the ad many times that your trade is your stop. Come over to our website at TFNN. You're going to see the banner on the top and the side. Hit that banner, bring it up. They'll put $25,000 of paper money into your account, and you can trade either options. Well, there's an options type of platform, contracts. You can trade inside that indices, commodities, currencies, all of the above. Darrell Martin, what's going on?
How you doing, man?
I'm doing great. So it's going to be interesting. Bottom line is that the Twitter's numbers get released, and they get released through Twitter from someone else. Seriously, man.
There's some serious irony going on there, right?
There is, man. There's no doubt. So I'm looking at your screen right now. Oh, yeah, because there's action in this. And what we're looking at, folks, if you happen to be driving in a car, we're looking at all the currency pairs, because there's no doubt there's been heavy, nice volatility in these currencies out here today. So tell me what we're looking at out here.
Well, basically just pulling up expected move on deviations.
Nice.
We got currencies. We got oil. Oil with that whole cargo thing going on today. Cargo ship in Iran. And basically went down half a deviation, went back up a full deviation move, retraced right back to settlement. I mean, to see spot on in the chart there.
Wow. Yep.
And we posted at 8:30, said it'll go down to 56, 56.27. Then one deviation up move was 57.71. I mean, it broke it by like about 10 ticks, and then pulled right back down to pretty much 57 right there, right at settlement.
Nice.
And really, it's just the whole idea is, I mean, whether you're trading Nadex, binary, spreads, you're a futures trader, you're a forex trader, really doesn't matter what you trade. We can pull them up now, and by using these, you have that. Like, how far is far enough? How far do I need to be looking for a reversal?
Yes.
Where do I need to be tightening my stop or taking my profit? And
which is crucial to understand, right?
Oh, yeah, because, I mean, you just feel like it's going to go forever.
Because what happens is this. You know what's amazing, folks, and I know you know this, Darrell, but it seems that, when things are really moving, either up or down, folks, right? Right when they're going to turn, that's when they seem like they're going to move the most, even though they moved. Okay, and that's where this deviation level helps tremendously, man.
Well, I got like pound dollar up right here, and showing the chart on it.
Yes.
And so we basically hit a deviation, low to high, like it basically ran up.
Yep. 153. Yep.
Yeah. So right there we see like 153.27 is where we said basically like that's a one deviation low to high at that point.
Okay.
And you can tell like right there, I mean, it just like halted.
Right.
And like you said, like it's just as it seems, it's like because you had a channel breakout, right? We had a channel right here, basically between, I guess you could say, about 645 and 70.52 high.
Okay.
So between 5,300 and 52.60, about a 40 pip range going on. And then it finally breaks out. It does so with some volume.
Right.
At 10 a.m. Right. You get a volume spike right there.
Sure.
And pops up, and it like pops right with that volume right into that deviation.
Now tomorrow, I mean, I know you like, there's a lot of different trades you can put on, at these news events. So tomorrow, what are you going to be looking at? Because that news event's going to be pretty intense. It seems like this 2 o'clock event is setting up pretty good, man.
Yeah, the FOMC event looks really good. I look for two things. Okay, I know what the average move on most of these pairs when there's not a press conference is 50 pips.
Okay.
Okay, so most of your majors is about a 50 pip move.
Yes.
Okay, so I'm going to go and I'm going to look at implied volatility.
Okay.
And by saying I look at implied volatility, I don't mean I'm getting all statistical. I'm going to go in and look at how expensive it is to put on like either a straddle where I buy, basically sort of buying a call and selling a put.
Okay.
in this case, it's going to expire in, like an hour and a half.
Which is sweet.
Okay.
Yep. Because
So-
that's costing you less bread. Okay, yeah.
Exactly. So instead of having one that's like, Friday or whatever, and on Forex too, which you know is going to move.
Right.
You can also look at this on gold for tomorrow.
Yes.
Because, the problem with gold is you have to look at the weeklies. That's what I don't like about it.
Okay.
But
Because
anyway,
gold closes at 1:30, folks. That's what happens, right?
Exactly. Yeah.
Right.
So I always would go, I'm like, come on.
Right. No, I'm with you. I know. Believe me. Yeah.
But anyway, so it closed at 1:30 with the pit there.
Yeah.
But so it got till 3 o'clock, which is plenty of time. And so I know the average move is about 50 pips in that 30 minutes, or 30 minutes to an hour right
Yes.
there after the announcement. So if I can put on a strangle and it costs me, say, $25,
Okay.
then I have a decent trade.
Right.
Okay. Because I want to be able to basically make $25, right? And I have to make 25 plus the loss on the other side. So basically I want to strangle at around $25, $30 or less. Okay.
Yes.
But what happens a lot of times is they just inflate the crap out of it.
Okay.
These are like FOMCs coming out. And you'll go in there and you'll be able to put on basically like an iron butterfly, which is just like buying a binary below, selling a binary above, or an iron condor, basically start doing a sort of a credit spread on both sides, like a buying a spread below, selling a spread above.
Yes.
And I mean, I'll go in there and you're talking 100 pip wide spreads, okay? And between the combination, I'm getting 80 pips.
Nice.
So I have a 20 pip risk if it went to worst case loss.
Right.
But
That's pretty intense. Yeah.
But I can make as much as 80, and I'll make $1 for every tick less than 80 that it moves up or down.
That's a good scene. Right.
Which is the exact opposite of what most traders are going to do.
Right. No.
Because they're going to go in there, they're like, it's FOMC. I am going to strangle this puppy,
Yes.
And they don't realize they're paying like $70 for a strangle.
Right.
So they can only make $30,
right.
On the trade. And
when you have a 1 for 4. Exactly.
Exactly. Yeah.
Right.
And because I mean, basically, if I risk $35 on one side, risk $35 on the other side, the most I can make is $65. If I risk 35 on a binary, I can only make 65 because they add together to be a $100 value.
Yes.
So if a binary is worth $100 and my risk is 35, the most I can make is 65. Well, if I did 2 of them, if I bought one for 35 and I sold one for 35, and let's assume it just goes one direction, okay?
Yes.
Then I lose $35 on the other side. But I make 65, so I net a $30 return on a $70 risk.
Right.
Which, what isn't horrible if it worked constantly, but very often it'll pop right back in. Okay.
Yes.
Now, if it pops all the way back the other direction, take profits might work. But to me, I'm like, well, if I got a 70-30 risk reward and I got a big range, it's probably going to pop outside my range. I expect that fully. Okay. But it's just look at when markets pop with volume and what happens right after that. They pull back. Yep. I'm talking about like an intraday basis.
No, absolutely, man.
And I mean,
the thing
the
that's
pound
so
dollar
cool.
chart I have up right here, you can see a volume pop and a reversal, a volume pop and a reversal.
Yeah. And what happens, this is what's so bizarre, folks, on FOMC meetings. The markets go both ways. I mean, it's very unusual that it doesn't. I mean, it flips both ways. And it's almost like, you used to say, oh, if it goes up first, it's going to go down. If it goes down, it goes up. It's like there's no rhyme or reason. The bottom line is that you get both sides of it, which is amazing, actually.
Yeah, and it moves like lightning. I mean, it's like boom, 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 boom. And then it gets a little bit slower. Then it'll get a little bit faster. You get a little bit slower, and then it'll sort of chill out.
Yep.
It is a good time. So like you got the neutral and you got the strangle strategy. The one other thing that I really like doing, and I made a killing doing this on the last FOMC.
Okay.
As I go in, and I just pull up all 4 and 5 minute binary charts.
Yes.
And I just go with the trend.
Okay, nice.
And I mean, I'm going in, and now I'm quick. I'm set to take profit at $20.
Oh,
and
yeah,
I mean,
yeah.
When I say 20, I mean 20.
Yeah.
Not 20-ish.
Right. No. Yeah.
I'm just grabbing. I mean, I'm buying 20s. I'm buying 30s. I'm buying 40s. I'm buying 50s. It's whatever I can get my hands on.
Right.
Getting out $20 later, it's like boom, 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 and just literally going back and forth. I mean, $3,000-$4,000 in 30 minutes.
Cool.
And because you get a lot of volatility. Those 5 minutes move fast. It's a very good combination.
It absolutely is. Listen, folks, come over to our website at TFNN. You can test drive the Nadex platform right here, right now. Hit the Nadex banner. They'll bring up the platform. They'll put $25,000 of paper money into it. You can be trading that tomorrow. Bottom line, it's going to be a great trade. Darrell, have a great one. Have a safe
Chapman
one.
has just announced 2 live workshops that he'll be hosting April 28th and May 5th that only subscribers to his opening call will gain access to. On April 28th, Basil will host a 45-minute live online workshop, The Essentials of the Chapman Wave, where he'll teach the basics of the Chapman Wave notation that Basil created and uses daily in his trading and newsletter recommendations. On May 5th, Basil will host a second 45-minute workshop where this time he'll revisit the 1929 market comparison webinar and provide his attendees with an updated take on the socio-economic trends Basil has spotted currently taking place. If you're an opening call subscriber already, then your seat is already reserved. If not, then sign up for a 30-day free trial to the opening call today. You get a month of Basil's daily newsletter, The Opening Call, along with 2 live workshops coming up. Don't miss out on this offer. Sign up for Basil Chapman's Opening Call newsletter today on the front page of TFNN.com.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Twitter opened back up for trading. It's down $8.90 right now, trading at 42. It's been as low as 40. It's been down $12. And, you know, this has happened before, and I've seen it, and it's just amazing. The initial tweet, the initial release was right on their investor website, folks, and that's where this basically intelligence firm picked it up. The amazing thing that I find about investor relations people in general, because I have to deal with them, is that it's amazing how many investor relations people absolutely don't even understand the market at all. At all. It's just amazing. And I suspect whoever put that up there basically more than likely had no clue. Bottom line, bad scene. This thing is not only crushed, it's crushed with volume. And if you take a look at Twitter has, we put this on a daily, weekly basis, what you're going to see, it has a high volume low that hasn't been tested at $29. So, you know, you're going to have high volatility out here today, but bottom line, Twitter's got a lot lower price in the future. Let's go to Max in Fort Lauderdale. Hey, Max, what's going on?
Good afternoon, Tom.
How you doing, man?
What was the name of the financial investigation firm on Twitter? What was its handle?
It's the, let me get it for you. It's Selerity. Selerity.
Okay, thank you.
Absolutely.
On FNV, I've heard you talk about it, and I looked at the profile, and it holds more than gold. It has a lot of base metals. It has some coal and oil. Do you have a percentage breakdown you can post on your screen of the percentage of what its holdings are?
No, they don't hold anything. They're like a bank, okay? So this company here only has 26 employees, okay? They take in like about $500 million a year, but they operate as a bank. What they'll do is this: it's a royalty company. So let's say that you have a gold mine. They'll say, okay, you know, you're getting this much out of the mine. We will give you this much money, and we want the royalty off the top. The thing that's cool about royalty companies is that they don't have the risk of price of the expense ratio. They're getting money off the total gross price, okay? So what they do have is that, you know, they finance mines. They got into, and this was too bad, was that they got into a few oil and gas deals. Excuse me. And they get royalties off that also. But that's how that works. They don't actually hold anything.
Okay. And what do you think of Apple? You think it's good for a little short trade here?
Yeah, Apple's going down. I mean, if you're not, are you buying it? Don't buy it.
No, I shorted it.
Yeah, don't buy it. I mean, Apple's in good shape to be a short position right now, because what you also have now, this is where this always gets bizarre, folks, okay, is that Twitter shouldn't have anything to do with the rest of the market. But guess what? It's going to, okay? Because what ends up happening is that many of the same people that own Apple are going to own Twitter, okay? And what you're going to see here, just because Twitter is down $10, is that people are over their head. And what you're going to see is that they're going to have to sell Twitter because they're down 10 grand right now, and they're going to have to sell Apple. So what you have, and what you hear, I'm not talking about long-term traders, folks. What I'm talking about is intraday traders. Because, see, all these intraday shops, okay, you know, you trade momentum. So bottom line, the momentum wasn't bad on Twitter before this happened. Well, bang, they got whacked 10 grand per 1,000 shares. Well, guess what? What ends up happening when you're trading intraday, it's not like a 50% margin deal. They get portfolio margin, and the bottom line is that they can whack that up 4, 5, 6 to 1. So I suspect what you're going to see because of that is that as we come into the close, you're going to see some nastiness inside Apple, inside Twitter, because that's just, you know, I've been in the shops. I know how there's way too many people on the wrong side of that right now, and they have to be closed out before the trading day is over. So you're going to see some more down action, you know, inside those equities, man.
Thank you, Tom.
Okay, man. Have a great one. Have a safe one. If we go over and we take a look at the 3 Qs, you see it right in the 3 Qs, folks. And the 3 Qs, it's not that Twitter doesn't have that large weighting structure. What you have is that it has to do with the other positions that are on because of what just happened with Twitter. You know, that's how that goes. The 3 Qs right now are trading at 109.87. And, you know, we'll see whether they close inside this 109.42. The 109.42 to 108.94 would be the number that you get down into that level, you are back inside the lower range. And at the lower range, okay, basically saying, hey, we're going lower, and you're going to be going dramatically lower, not in a small way. The thing, and you know what gets interesting here is that, you know, if you read my book, The Art of Time in the Trade, you know, technically, this is something that can be taught on a continual basis, and, you know, you just got to basically focus on it, meaning how markets move. What can't be taught is what I just went through inside why I think Apple's going to pull back and Twitter's going to get sold, because that's one of those deals, folks, that when you go through cycles, you know, and that's why this experience is long. I'm just saying for anyone on a longer basis, cycles and or trading shops. That's because what ends up happening is that you'd be really surprised about the amount of impact that they can have, not only on that stock, but when something like this comes out, on the whole market on a short-term basis. It's only a short-term basis. But what does happen on a day like today, that is disaster because of the fact that we're down 950 right now. And that's going to be a wipeout. Just so you understand something, that's going to be a wipeout on a few prop traders. Big time, too. You know, because what we had is you're at the highs. They were going to make their decision at the end of the day. They were not. There's plenty of those folks that were not going to stay in a position. Well, guess what? The stock is down 4 points. They halt the stock. When the stock opened back up, folks, it opened back up at 40. So it's one of those deals, even if you got to stop in, it didn't matter. Bang, there's 10,000 down per, you know, and just so you understand, everyone trades in thousands. You know, that's just kind of how it goes. Do you know what I'm saying? So 877-927-6648. Let's see. We got a gold question in here. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to come right back. Dow Industrials are up 67. Nasdaq's down 7. S&Ps are off. They're up 375. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester, Mass. Hey, Marty, what's going on?
Hi, Mr. O'Brien. Got a quick little thing here.
Yeah?
It's called patience and perseverance.
Okay.
Patience. I heard a goddess yelling, the magic silent word, and methinks I must be smelling pokey money round the world. Perseverance. When markets roil like stormy seas, good traders seek safe port. In financial times like these, you need Tom O'Brien's Gold Report.
You are too much, Marty, man. That is so cool. Well, listen, man, I really appreciate that.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Lots of action out here today, folks. Oh, baby. This one is a quote by James Garner. Believe in yourself and everything you can be. No doubt. Yesterday's gone. Tomorrow's not here. What are you doing right now? Grab it, folks. Grab it and run with it. Market-wise, let's take a look at it out here. We had the Dow finish up 72. NASDAQ down 4. S&P's up 6.5. Gold contract up $8.30, trading at $1,211 an ounce. Silver up 18 cents at $16.58 an ounce. Platinum up $9 at $1,157 an ounce. Copper up a penny at $2.78 a pound. Light sweet crude flat at $57 a barrel. Bonds, we had the 10-year down 15 ticks, 128.27. 30-year off almost 2 points at 161.02. And King Dollar down 686 ticks, 96.22. The euro up 81. At 109.72, and the yen down 16 at 118.88. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. We got volatility out here in spades, folks, and the Fed meeting at the statement is going to be 2 o'clock tomorrow, and you can expect a lot more volatility in spades. So what do we do out here today? You got a sideways move. We're up 67 cents, actually, but bottom line is that you're still in a lower range. The range we're talking about on the SPYs is 212.24. Now, what does that set up? That sets up that you're going to be making your way down to the lower end of the consolidation. The lower end of this consolidation is 204.40. Why? Because you got over the high yesterday. You couldn't handle it on price. The volume characteristic, closing on Friday, if you close under this, it's going to be anemic volume. Bottom line is that on a weekly basis, that is. NDX 100. Now, this is the big one, and the reason why is this, is that the NDX 100 itself, folks, had all the juice. Bottom line, that led the market on the way up. What are we doing? Bottom line, you had a sideways move out here today, down 22 cents. You did 34 million shares. Now, this is where it gets subtle. You had an expansion of volume. You have gone to lower price. What you haven't done yet is get back inside the lower range. The lower range starts at 109.42. I expect what you're going to see. It's going to crawl its way back in there tomorrow. We'll see what these numbers come in after the close today, but that's the way that's set up. The small caps, the IWM. Bottom line, IWM can't get out of its way. That was a sideways move also out here today. But what you also had inside the IWM is that you had an expansion of volume once again. And so what you're going to have what you do have on the daily basis is an expansion of volume. On the weekly basis, you suspect you're going to have anemic volume as you are pushing into the highs. So bottom line, it wants lower price. Now, let's go over to the gold market. The gold market, folks, I expect gold tomorrow to be highly volatile. I mean volatile in spades. It's going to be up, down, and all around. Why? Because we get the Fed meeting out here tomorrow. We're trading out at $1,211. Now, what we did do, flat out, wide price spread, accelerated volume, sweet volume yesterday, 207,000 contracts. Today we did 145,000 contracts. This baby wants to get up and hit into this 1224. We're already at 1211. What I suspect you're going to see out here tomorrow, we can hit the 1224. We can hit 1200. Bottom line, high volatility all over the place at 2 o'clock. That being said and done, gold wants higher price. You have a few ABC structures on the way up. They took out the B points today, took them out with volume. Bottom line, though, be prepared for some heavy volatility when that number comes out tomorrow. Bonds. We go take a look at the bond market. We look at TLT, because bonds, gold, and the dollar, folks, you're going to see some heavy volatility out here. The market itself, too. But bottom line, I expect those ones, big volatility. The TLT, we're at 127.29. The 127.54 got broken today. It got broken with 6 million shares versus 9. So what does that set up? It sets up, it can go down to this lower price of 124.94. The volume is contracting, but bottom line is that little baby can get down there. So, and that's the divergence. There's here, let me do the dollar index first, and you'll see how this baby's shaking out. Because the dollar index, so with bonds going down like that, what that would be saying is that, hey, they may go up on rates tomorrow. 25 basis points and blow everyone's mind, okay? That's what the bond market is saying. The dollar is saying that, no, they're not going to go up on rates. The dollar is breaking lower, wide price spread, has the volume behind the move. Gold is a toss-up, you know, because gold already made this nice move. Bottom line, 2 o'clock tomorrow afternoon, that's going to be the number. Because when I look at the dollar index, we're trading at 96.25, and what hasn't got tested is the 94.76 from March 18th. That's a huge number, folks, okay? And that little baby is going to get tested. After the close out here, we get some numbers happening, and bottom line is that what you're going to see is you're going to see big volatility. We'll start with Buffalo Wild Wings, BWLD. Buffalo Wild Wings closed out here. Where's she? There she is. This little baby is getting toasted and roasted. We just went from 184 to 166. Let's see, BWLD. Let's see what they're saying. And as one of the Tigers said in the den, this is pretty amazing, too, because bottom line is that what was supposed to happen with all these restaurants, because gas was getting so cheap, that bottom line is that they were supposed to make money hand over fist. So here, this is how the numbers go. Buffalo Wild Wings, their earnings per share, the estimate was $1.63. They came in with $1.52. Their revenue estimate was $452 million. They came in with $440 million. Their comp sales were supposed to be 8.6. They came in with 7. Their franchise sales were supposed to be 7.7. They came in with 6. Their, let's see, comp sales first 4 weeks of the second quarter was plus 4.2. Bottom line is that you talk about getting toasted and roasted. It went from 184. It's trading at 166 right now. And let me pull this up for a bit. Let's look at this. 166. What a trip, man. Okay, so here, watch this. Let's put this on a weekly for a second. You're gonna see this is the ultimate. 167. When you see this, this is crazy. So, July of 08, high is 167.64. That's the last time with any volume. That's a natural place that it wants to go to. But what you're going to have, it's going to get croaked because it's going to come down with vicious volume. So what you're going to probably have is it's probably going to go after that good old October low, which is 132. GoPro, GPRO. Let's go see what GoPro's saying out here. GP. Okay, so GoPro made their numbers. GP. Let's see what the stock's doing. Bottom line, GoPro closed at 47.02. GoPro right now is trading at a price point of 46.39. The estimate was 18 cents. They made 24 cents. Bottom line, revenue, let me see what this revenue number comes out at. Revenue number, the estimate was $341 million. They made $363. So the bottom line is that they beat top and bottom. Now, GoPro has already got smoked. GoPro in the last 6 months has gone from a price point of 87 down to 37. Right now, it's trading at 46. And bottom line is that at 46, you know, can't get out of its way. So I suspect you're going to get more selling as this comes along. Wynn Resorts, WYNN. That's, of course, the huge gambling casino. Oh, man, they're getting sliced and diced. October 15th, here we come. Oh, man. Wynn Resorts, okay, they closed at 130. That is trading at 116. This is an ABC structure on the way down. They're not going to let anyone out of this market, folks. That's what's happening here. This is going to be a monster ABC down. This is an equity that has gone from $247, and now it's 116. One-way trip all the way down. And so what do we have? We got, let's see, 124. It broke 124. Oh man, this is toast. This is going to 54 bucks. We're going to be right back.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe future economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Darrell Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, in the world of Bank of America, folks, check this out, okay? This is wild, okay? So this just come across the tape. Bank of America is being investigated by the Securities and Exchange Commission over whether it broke rules designed to safeguard customer accounts, according to a person with knowledge of the probe. Investigators are examining a variety of large, complex trades and loans over a 3-year period intended to save on funding costs and free up billions of dollars in cash, billions, and securities for trading that the firm otherwise would have needed to keep off limits. Now, I'm going to read that part again, because what you want to understand here, investigators are examining a variety of large, complex trades and loans over a 3-year period intended to save on funding costs and free up billions of dollars in cash and securities for trading that the firm otherwise would have needed to keep off limits. The Wall Street Journal reported Tuesday, citing identified people familiar with the inquiry. Bank of America stopped deploying the strategy in mid-2012, and now the SEC is investigating whether it violated customer protection rules and if the company misled regulators about the actions. Okay, so check this out, folks. Bank of America. So without knowing the whole context of it, reading that, what the allegation is that Bank of America took customer funds. So the way a broker-dealer works, absolutely those customer funds, including the securities, do not supposed to be used for the broker-dealer for any purposes whatsoever. What this is saying is that, number one, they made a sophisticated, complex trade and loans so that they could use it. Okay? That's the first part. Second part, I'm going to bring you back to a long time ago. And this was one of the things that absolutely blew my mind about this business in general and about large broker-dealers and banks. And the Asian contagion, and this is public information, folks. This is right on the SEC site, because this is where I got it, which blew my mind. It was the same thing like when this just came across here. I said, this is amazing, because this is the same thing, that Coresign had said they were doing, that no, this is a loan aspect. The bottom line is that, we'll see how this shakes out. But check this out. In the Asian contagion in 1998, it was a long-term capital. It was Asian contagion, long-term capital. Well, what was going on there, folks, is that many of these banks looked like they were going to go down. That's it, like over. What Bank of America did, and this is public information on the SEC site, is that their treasurer, who ended up being their CEO later, wired out of the bank, okay, into the Bahamas, huge amounts of, it was billions of dollars. And the reason they wired it out is that they thought that the market was going to crash, that the bank was going to be out of business, and they wanted money to be in business. Okay? So check this out. This is amazing. The SEC caught them, and there's a rule in there. It's called net capital cost. So net capital cost, you have to keep so much money in the kitty, and if you violate that, you're supposed to stop everything right then and there. Bottom line, they did it, and you know what? They got, I believe that the fine was $500,000. What's the point of the story? The point of the story, folks, is that the regulators are in the bag, the banks are in the bag, the soft money's in the bag. Bottom line, fight it as much as you can, because it's absolutely bogus. When I just saw that come across, it's going to be interesting to see how they spin this deal, okay? So when they took over Merrill Lynch, I suspect what they did is that their funding cost, if you can raid the client's accounts, and it looks to me like the way that come across, they're raiding the client's accounts through some kind of complex trade, but that complex trade was doing what? Was putting the client's money at risk. So we'll see where this shakes out, but it's pretty intense. Let's go to some more numbers, because these numbers are coming out, and most of these numbers are basically bogus, folks. Triple D. What do we have with Triple D? This is 3D Systems. That closed at $26.20. This is trading at $25 right now. And let's see what they have to say. This is, let's see. Oh, this is pretty intense. This is not even, this is trading down because Strata Systems, that's crazy. Oh, it's not crazy, but that's normal. Let me see. So Strata Systems, it's Strata Systems, okay, that came out and issues a warning, and their stock got halted, which is SSYS, but that's hitting 3D like ASAP. So let's go to SSYS. Oh, this is going to get killed then. Man, oh man. If the other stock is down 10%, so SSYS is a stock that just went from 120 down to 50. We bring this up, we put this on a longer term basis. We'll put it on a monthly basis. Oh, this is going to be, this is amazing. This is, you talk about going all the way to heaven and back to hell. This is an equity that started out in 2011 at $17, goes up to 138, it's a monster ABC down. Check this out, folks. This is pretty amazing, actually. This is really amazing. Let me put this on a monthly. This is just this might be a wipeout to like being out of business. No, I guess it can get down to $14. It's at 49 right now, and it looks like it's going to go down to $14. Yeah, this thing wants to pull. This is crazy. Okay, so the month of February, it broke a B point, broke it with volume. It's a monster ABC down. Your A point on this, I'll be conservative. Your A point was 125. Your B is 70. So what? That's $65. And your C is 81. Yeah, you're talking where this wants to go back to. This is going back to 2004. Man, oh man, you get $19.38. That's pretty intense. That's really intense. That's pretty amazing. We'll see when they come out with numbers. But bottom line is that has a long way down. If we go over to the 3Qs just for a second and see what the 3Qs are trading for, because what you're going to see here is that you're going to see a lot of action after the market has closed here, which we have, because of the fact that you have so many equities that basically are getting hit. So the 3Qs aren't bad. Something's up inside them, because the 3Qs closed at 110.04. It's trading at 110.13. We take a look at the SPYs. The SPYs had closed at 211.44. That's trading at 63. And the IWM, something's up in there. Either that or people are just, the IWM closed at 125.16. That is trading at 125.25. The bond market's interesting. The bond market continues to go lower, and that's kind of illiquid at this particular point. But the 30-year bonds right now are trading down a full 2 points. They get some juice down there. We're trading out at 160.23. Dollar index is still down 757. If we do look overseas, what we had overseas happen today is this. You had the DAX down 1.8%. The CAT was off 1.8. Both of those, by the way, were down with some real juice. You come off those highs, and you come off those highs with volume. This is Tom O'Brien. This is TFNN. Don't forget, our folks, our man, Mr. Basil Chapman, is going to be doing an outstanding workshop tonight, 5:30 to 6:15. You can get in that workshop by test driving his daily newsletter. You can do that absolutely free by coming over to our website at TFNN. We're going to be right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Basil Chapman has just announced 2 live workshops that he'll be hosting April 28th and May 5th that only subscribers to his opening call will gain access to. On April 28th, Basil will host a 45-minute live online workshop, The Essentials of the Chapman Wave, where he'll teach the basics of the Chapman Wave notation that Basil created and uses daily in his trading and newsletter recommendations. On May 5th, Basil will host a second 45-minute workshop where this time he'll revisit the 1929 market comparison webinar and provide his attendees with an updated take on the socio-economic trends Basil has spotted currently taking place. If you're an opening call subscriber already, then your seat is already reserved. If not, then sign up for a 30-day free trial to the opening call today. You get a month of Basil's daily newsletter, The Opening Call, along with 2 live workshops coming up. Don't miss out on this offer. Sign up for Basil Chapman's opening call newsletter today on the front page of TFNN.com.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this two-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back, folks. 877-927-6648. Give us a call, folks. We know what's going on in y'all world. There's a lot of action after the close out here. So U.S. Steel had closed at $27. That's trading at $24 right now. Let's see what they have to say. U.S. Steel posted a surprise first quarter loss and cut its full earnings forecast after a flood of imports and prompted the nation's second largest producer of the metal to idle some capacity. Earnings before taxes, interest, depreciation, and amortization expected to be $700 to $900 million. Bottom line is that they were looking for $1 billion to $1.4 billion. So bottom line is that U.S. Steel trading at a price point of $24, and we'll see. Let me bring this back for a second. So U.S. Steel, this thing's already got croaked anyway. I mean, it went from $196, never got out of its own way, has a high volume, swing low at $20. So $20 is game out here. That's the way this is shaken out. SSYS. So SSYS has just opened up, and this baby, no doubt, is getting killed. This closed at $51.30. It's trading right now at $41. And let's see what they have to say. They see revenue. They saw revenue, folks, of $940 to $960 million. They see revenue now of $800 million to $860. Their earnings per share, they saw 30 cents. They're going to make 2 to 4 cents. This is really intense, man. The first quarter revenue, they had seen, that was a yearly estimate I had given you. The first quarter revenue, the estimate was 199. They took in 171. So bottom line is that they got some big problems. ESRX, that's Express Scripts. Let's see what they have to say. Express Scripts. Sorry about that. There she is. Okay, that closed at $87.50. That is trading out at $88.50. Numbers go like this. They have a share buyback that is happening. Okay, Express Scripts, the largest manager of pharmacy benefits, said it plans to buy back $5.5 billion in stock after the company reported a first quarter profit that matched the analysts' estimates. Profit, excluding some items, was $1.10 a share. Their net income rose to $440 million, or 60 cents a share. That compared to $328 million, or 42 cents a share. Bottom line is that that little baby is staying at highs. And you know, the drug business, folks, is nothing like the drug business. There's no doubt about that. And if you saw, you know, the amount of takeovers, you know, I saw this out here yesterday, and this is pretty amazing. So the amount of takeovers, what these takeovers are all about is there's certain companies that understand the pricing structure. Let's put it this way. All these pharmaceuticals should understand the pricing structure. The pricing structure inside drugs, just like inside the for-profit schools, folks, have to do with we're not paying, okay? We pay insurance. The insurance companies are paying. The government's paying. Someone else is paying. When you have a third party paying out, period, okay, no one's watching the till. Bottom line, as these companies are taking over other drug companies, what they're doing immediately is that they look at a drug that they have that they know they're selling a lot of. They raise the price of that drug 200%, 300%, 400% ASAP. Pay for the deal in 2 seconds. Guess what? No one's looking. And bottom line, what can people do about it? You can fight it, you know, bottom line, but a lot of these drugs people need, and bad scene. If we go back to Triple D, we look at Triple D. And this one here has nothing to do with Triple D at this point. What it absolutely has to do, though, with is the how Stratus has come out with numbers. This little baby closed. This could be interesting. No, it closed at 26. It's traded about $24.50. This also looks like it's going to blow out. Actually, this one already did. So check this out. This is an ABC structure on the way down anyway. Let's pull this up. So this was already telegraphing. It broke all its lows. This baby was already telegraphing that it was coming back to. You know, all of these are coming back. This is going to be wild. This is coming back to 011. Stratus is coming back to 04. This is at $26. This is coming back to $19.51. That business, you talk about some beatings in that business. That is absolutely amazing. We go back to Twitter for a second and see where Twitter's doing. As a couple of Tigers were saying in the den, I'm sure, unfortunately, at the Twitter headquarters, I suspect there's going to be some folks cleaning out their desk right now, because if you didn't hear, folks, what did happen at Twitter, Twitter closed down $9.39. Monster volume, 70 million shares. And what happened intraday, okay? This happened at 2... Well, no, at 3 o'clock. At 3 o'clock, oh, this is typical. Oh, check this out. This is what happened, folks. Okay, so Twitter, of course, is in California, right? San Francisco. On their investor website, bottom line, they put their earnings. A intelligence firm picked them up on their website, broadcast them out. They tweeted them out, 4 separate tweets. When I just looked at what time it was done at 3 o'clock. You know what that is, folks? That is someone in investor relations don't understand West Coast time versus East Coast time. Pretty amazing. That is like so far over the top, it's unbelievable. But as I said when this was happening, inside investor relations in general, it's amazing how many folks absolutely they're in that job and they don't understand the markets at all. Akamai Technologies. Let's go look at Akamai. Akamai just came out with numbers. Akamai, there's So Akamai closed at a price point of 76. Oh, this is interesting. This is getting hit too, man. This is going to be an interesting. As soon as these futures open back up, this is going to get interesting because each one of these equities are getting hit. Akamai closed at 76, trading at 73. Let's see what Akamai has to say. They're saying, and this always gets dangerous, they're in line. Their earnings per share were in line. The shares were falling anyway. The estimate was 61 cents. They made 61. Bottom line. Top line estimate, 526 million. They took in 526 million. So they had it right across the gauge, meaning how much they were taking in, what they were looking for. They did it all. LVS. Let's go over to LVS. This is Las Vegas Sands, and what you're going to see with LVS is this. LVS has just gone from a price point of 55 to 53. Now, they didn't come out with numbers. Where that's coming from is that's coming from WYNN. Because what you have is that WYNN did come out with numbers, and Macau folks in China, that WYNN has gone from a price point of 132 to 115. And what you're going to have is that's where these companies were making all their money. Bottom line is that the crackdown in China is hurting the gambling business in an extraordinary way. What you do have with Las Vegas Sands is that has a high volume low at $49, and that's where this baby's going. That high volume low is from December 14th, and that's going to be fast and furious. We'll see how this how it handles even that level, because when you take a look at Las Vegas Sands, man, you talk about being, yeah, this is these gambling stocks are in big trouble. So check this out. This is going to be, you talk about a round trip. This is going to be amazing, actually. Let me put this on a monthly. If you want to see something that's technically like about as classic as you can get, what you're going to see, it's any of these gambling stocks. So what am I talking about when I say that? So Las Vegas Sands had come off a high of 163 in 07. It goes from 163 down to $1.20 in 2009. The first leg up, folks, takes it from $1.09 up to 52. Now, 52 is a good number. That was a good number. That number was generated in November of 2010. Then what does it do? Totally goes sideways. And when I talk about no one in the store and they're buying the product, this is like the ultimate in this. Each and every month, check this out, by the month, what people were buying. The last time we had any volume in this equity was November of 2010. The top price was $55. It did $900 million a month. It gets over that price, and it takes a year to get over that price. It does it in April of 2012. April of 2012, we end up doing 229 million shares. 229 million was taking over 900 million. But now check this out. Then it takes another leg up. It gets up to highs with 96 million. So 96 million versus what? Versus a 900 million. That's what you're talking about. Going in the store, no one's in the store. See ya, don't want to be ya. You stay right there, folks. We'll come right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. Okay, folks, so tomorrow we have the Fed announcement at 2 p.m. And, you know, the way the markets are trading today, there's going to be huge volatility. There's no two ways about it. But something just come across the tape. And, you know, when you're dealing with political and financial animals, folks, okay, the two heaviest, I would say, professions out there that are just nasty are definitely the bureaucracies inside the politics and financials, right? And the way the market's trading today, I said, man, this is really interesting because what you have is this, is that you have bonds basically going down and there's some juice behind this. Like, man, are they going to go with a 25 basis point, you know, up? Because the market's not looking for that. at this point. The Fed has been telling us flat out they're going to go, okay? But bottom line, numbers-wise, doesn't look like they're looking for it. So when you look at that, I say, okay, that looks like they very well could. The dollar is basically trading like they're not going to go right now because the dollar wants to go lower. And gold is really like a toss-up. Gold is pulled up really nice, okay? But with a announcement at 2 o'clock tomorrow, I expect all of them are going to go up and down all around, have high volatility. But now check this out. This is another thought process. And, okay, so I'm going to go through this thought process. This just came across the tape. So Elizabeth Warren and David Vedder. Now, Warren and Vedder, folks, okay, like black and white, okay? It couldn't be any opposite. But guess what? They're getting together, and they're collaborating on legislation that is going to further curb the Federal Reserve's authority to bail out banks in a crisis, according to two people familiar with the matter. They are seeking to define more clearly when a bank is solvent and thus eligible for funding, limit the length of time that a firm can borrow, and set penalty rates of interest on emergency loans. The discussion comes as Senate Banking Committee Richard Shelby crafts a broader bill on financial regulation. That measure may include trimming the power of the New York Fed, increasing congressional oversight of the central bank, and curbing its regulatory authority. The Banking Committee, which oversees the central bank, is looking at a number of federal reform proposals, including facets of the Vedder-Warmer approach, according to Tory Miller, a spokesman for Shelby. Now, check this out, okay? These people can't stand each other. They're coming together, and what are they doing? They're going to put pressure on the Fed. Now, that being said, and this is where it's so cool just having a larger, just thinking this whole thing through. And that's why I love this business. I don't like how the foundation of the business, because the banks are crooks, okay? But when I read something like this, you know what it's telling me, folks? Don't be surprised if the Fed does turn around and throw a wrench in everything. And you know why? Because what they're going to show is that, guess what? You need the Fed. If I've found out anything inside bureaucracies and how bureaucracies work, when someone comes after a bureaucracy, right, they're going to make what? They're going to make a statement, and that statement is going to be, you need us. And how do you make a statement? You make a statement, folks, by making something fearful. That's how this thing shakes out. This is going to be wild tomorrow at 2 o'clock. Because the bottom line is that the best defense for the Fed would be to raise rates tomorrow. Because you know what it'll do? It'll whack the market beyond belief. As the market gets whacked, what's going to happen? Huge amounts of pressure are going to go on all the politicians, whether it's Democrats or Republicans, saying, hey, what do you do? Leave the Fed alone. Leave the Fed alone. We'll see where this shakes out, man. But that's how this whole little baby is, I suspect. We'll see. I don't know if we'll see how it's going to play out. But what you will see with the amount of flack that's going back and forth here, the Fed, you got to remember something. The Fed has the purse strings, okay? So, and listen, I agree that the bank shouldn't get bailed out. Well, let me qualify that. I'm glad that the Fed bailed the banks out in 2007 because that was a disaster, and that would have took everything down. The aspect of the side deals that are done continually, okay, is totally bogus. It's why I'm cynical about the banking structure in general. Bottom line is that you get the gist of it. So tomorrow, monster day. Market-wise, though, get your stops in, folks. That's the bottom line, okay? What you absolutely have is that October 15th swing low, and the S&P is going to get hit, okay? Inch by inch. Every one of these equities are going down there. And just so you can get an idea of what we're talking, you're talking a long way down, folks. You're not talking a little way down. The SPY is at 211. The October 15th swing low is at 187 is the high of that. 181 is the low of that. It's a monster. It's a monster deal. The SPX, okay, cash S&P, we're at 2114. That number, okay, is down there. The high of that number is 1912. This market, if you go down 1912, they'll take conniptions. Never mind 1820. And the reason that the folks will take conniptions about a 10% move down, folks, is because we didn't have one. And I relate this, and this blows my mind that I'm even talking 20 years ago, but in 1994, the market had gone up so smoothly for so long, I saw people get wiped out, and there was only a 12 to 15% correction. And the reason was that the market hadn't corrected, I think, then in 14 to 15 months. Never mind 2 or 3 years. So what ends up happening is that people get placated. People have margin up to the yin-yang. They get over their head. But the biggest thing is they don't pay attention. So what ends up happening, as the market starts going down, they stay in their positions. It goes down more. They stay in their positions. It goes down more. They stay in positions. Then all of a sudden they get paranoid. And that's what markets do. Markets' jobs are take the most amount of money away from the most amount of people in the least amount of time. And it's the most efficient mechanism to do that I've seen outside of governments. maybe the market's more efficient than governments, actually. Bottom line, just get your stops in, okay? Because all that means is that you flatten out your position. If the market goes higher, it goes higher. Bottom line, it goes lower. Guess what? You just saved a nest egg after the market came back from a crash. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership, and then fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking it right here tomorrow. Go get them, folks.